All right, really interesting day so far in gold and silver. We're seeing prices soar as we're also seeing US 10-year Treasury note yields drop. And also on the back of that, the dollar showing some weakness relative to gold and silver. Now, I have some notes here, so I'm going to read off some of them. But gold and silver are up by more percentage points than the US dollar, as not only a global growth slowdown elevates their attraction, but weaker US economic news depresses the attraction of the dollar. Now, in a global environment, you would expect the dollar to be soaring amidst all of this negativity. However, all of the recent bad news coming or bad surprises that we've been seeing coming from the US with the data that's been released has not been good for the dollar. Now, to start off the day, going halfway across the world in China, we got some really bad news as far as the NBS is concerned. Now, the NBS is one of the, or is, as far as where we get the data from China, we get it from two sources, Kaichin and also the NBS. Now, the NBS is the public, is where we get, a lot of data from the public side in sectors, a public side in China. So obviously people raised their eyebrows at that, but they were saying some pretty bearish things. So they were saying that, with the Delta variant and floods, they've been seeing a slowdown. And then right after they released that news, overnight, we saw US oil prices actually tank. Now, that might be an indicator as far as what the sentiment is regarding the US in response to how China is experiencing a slowdown. Now, remember, I've said many times on this channel before that China, as far as the global value chain is concerned, is the manufacturing sector. So obviously over here, as they pass down those products, we would be affected negatively by what happens there, being that they are the manufacturing sector of the world. Now, to continue adding on to this, we also got some negative data coming out of New York. And again, this was surprise negative data. And remember, I've been saying that, we are going to be seeing an increase in we will be seeing a decrease in surprise positive US economic data. And we've been seeing that for some time as we see an increase in surprise negative data. So this is what we got from in August relative to the sky high record in July. So check this out. New York Empire State Factory Index tumbles in August from last month's record high. So let's see exactly what's going on here in this highlight that I'll read for you. Here are the numbers. The New York Fed's Empire State Business Conditions Index tumbled in August, losing almost all of its surprising gain in the prior month that took it to record highs. The headline General Business Conditions Index fell 24.7 points to 18.3 in August, the regional Fed bank said Monday. Economists had expected a reading of 30, according to a survey by Econoday. This is the lowest reading since March. Last month, the index had risen 25.6 points to record 43. Any reading above zero indicates improving conditions. So conditions are improving, but just at a slower pace. Key details. Now let me scroll down a little bit here. The new orders index fell 18.4 points to 14.8 in August, while shipments plunged 39.4 points to 4.4. The number of employees dropped 7.8 points to 12.8. Now, again, we've talked a lot about, the great resignation and all those things and employers having a hard time finding employees. Now, here's another important point on inflation. The prices received index rose 6.6 points to a record high of 46, a record high amidst this slowing growth. Now, again, I've been saying this a couple of times now. I am very hesitant to use the S word because, you know, there's a lot of sentiment behind saying stagflation. Obviously, a lot of people, and here's the thing, I never grew up in the 70s, obviously. So a lot of people who grew up in the 70s are very aware of what stagflation looked like. And, I'm hesitant to use that word until we get more and more data. But the more and more I'm seeing, we're seeing the slow growth, and prices are still rising, especially from the supply side. And again, we also had a record monetary um, stimulus. Now, optimism about the 6 month outlook rose 7 points, 39.5. Future capital spending plans slipped 3.3 points to 23. So people are possibly saying, hey, we are dealing with this Delta variant, but maybe 6 months from now it may not be that much of an issue. And yeah, there might be some reason to be optimistic here. But pretty much when this was released, we saw gold and silver prices rising sky high. Now around 8 o'clock, when pretty much in the FX markets, we see a convergence between the London and New York trading, and there's a lot of volatility there, a lot of volume there, I should say. But right around 8:30, you see another huge jump here in silver, and that's when we got the New York Empire State Index. So it's pretty much been rising ever since. And let's take a look at gold. Gold, pretty much same thing. Around 8:30, you start to see a rise here. Now, the DXY is beginning to slowly creep back up again from its lows. It had a double bottom there, and it's starting to rise up again. But the dollar obviously was a little bit weaker on the back of that, pretty bad U.S. economic news, and on the back of the U.S. 10-year yields falling because of that. So again, I still think this is an environment where we have to be mindful and watchful of the DXY. We can't completely discount it, but gold and silver do benefit from weaker real yields. Now, I will say, to end the video, there is this expectation that I will say more and more Fed presidents are coming out talking about tapering. And with that talk, there's the expectation that, they may start to announce it in September, and they may even begin to start doing it before the year ends. Many of them are saying that they expect the tapering to end by mid 2022, and which would mean that they would have to start before then. And many are saying they'll start sometime by the end of this year. So if they start tapering, obviously, risk assets will be pretty much shaking in their boots. And that's what we're seeing right now. We have a lot of as you can see here, there's NVIDIA, there's ARKG. Let's see, we have ARK Invest here, Tesla, Teladoc. Now, here's the thing. Amidst an environment where negative real yields, or I should say, when the 10 years dropping, Tesla and others usually tend to rise on the back of that. However, on a day like today, when there's more talks about tapering, you're seeing Tesla and others drop. And in response to that, or I shouldn't say in response to that, but on the flip side, you're seeing gold and silver rise. And again, that's on nearer term data. So there are a couple of things happening all at once, and I don't think gold and silver are reacting right now to that tapering news. Perhaps it's already been priced in. Perhaps we may see some weakness later on as talks continue. That's just something we don't know. But as far as the reaction of the stocks here, I do think they're reacting to the taper talks, because otherwise they would be rising with the 10-year yield dropping. And we're seeing gold and silver rising with the 10-year yield dropping, and we're seeing the dollar displaying some level of weakness. So guys, let me know what you think about all this in the comments section below. Again, it's been investing with TJ, and I appreciate your time.